and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest stock market trends, also help you really understand in today's trading session which are the sectors and the stocks that are in focus and are buzzing in trade. We'd also get you the expert views as to how should you be really looking at the markets, how should you approach, what should you be your strategy, and also which are the sectors and the stocks that can actually give you good returns from here on. But first up, a quick check on how the markets are doing. Well, the markets are up and running for the sixth day in a row, in fact at all-time high levels, the Sensex and the Nifty. Talk about the Sensex first, 355 points of a jump, 62,857 is the current level at which the Sensex is trading at, up by almost 0.5%. Also, when you talk about the Nifty, fresh all-time highs, 18,668. We are looking at the day's high as well as far as both the indices are concerned. So very strong move of over 100 points on the Nifty as well. So what's really contributing to the gain that we are seeing on the markets today as far as the benchmarks are concerned? Well, if you actually look at most of the sectors that are in the green would include, names from the banking space. And also when you talk about the other sectors that have been in momentum. So you do have the metals that are seeing rebounding. The FMCG stocks that are taking the faster lane today, also 0.5% increase for the financial services. You have the private banks that are doing well, profit taking in the PSU banking space. But if you see the pharma pack is also seeing some healthy gains of half odd percent in today's trading session. Apart from this, the autos are seeing absolutely flat. And the realty space is in fact down in trade, not participating that much. But in case you look at the advanced decline ratio, clearly 37 stocks of the Nifty 50 index in the green right now, 12 stocks in the red. What is the stock that is really contributing the most in today's gain? Talk about the FMCG major HUL. That's up in about 3.3% up from the day's high. In fact, 2609. That's the kind of level that you're seeing, and huge volumes being seen on that one as well. Apart from this, Nestle is also up over 2.5% in trade. And apart from this, you're seeing the metal counters that were seeing dragging yesterday, seeing a rebound. So JSW Steel, Tata Steel, all of them up in trade. Hero MotoCorp, second day in a running after that price hike news. So up and a half, 1.5% in trade as well. What's in fact not doing too well in today's trading action? Well, there are stocks from the power space like Coal India, Power Grid down in trade today, 1% or so. Bajaj Finserv is down. IndusInd Bank is seeing some kind of cuts of over 1%, and L&T is seeing some profits being taken off the table, 0.7% of a decline right there as well. Let's welcome our guest for the day. Mr. Krati Patini joins us from WealthMills Securities to help us really understand the take on markets. Mr. Patini, well, congratulations. All-time high levels on the Sensex and the Nifty, just like how we were discussing the last week as well. Help me understand what is your position on the markets right now? Where do you see both the Sensex and the Nifty really trading from here on, and what should be investor strategy?
Congratulations to all the investors who have been participating in India's growth story. The Nifty and Sensex are all-time high. But on a lighter note, Sakshi, there is a party is going on Indian indices. But people are looking for where the dinner is getting served. So the mid and small cap have not participated in the rally, and most of the investors' portfolios are primarily focused on mid and small cap. So there is a headroom for mid and small cap stocks. Right now, the party is going on with respect to the large cap stocks are concerned, like the big boys, like the names, the stocks you named like HUL, Reliance Industries. These are the pockets where the majority of the gains are coming back. And farm portfolio investors who have been the net sellers throughout the last quarter, they turned in the month of November the net buyers, and they have pumped in nearly 40,000 crores during the month of November itself. So we can see the mojo is coming back with respect to the fund portfolio investors are concerned with respect to India. So what is going ahead? There will be a stock specific action. The investors need to do a cherry picking. And as we have been advocating the investors, the Indian bull run is just started. And every dip on Indian markets gives a good opportunity for the investors to participate in this bull rally. And there are some kind of proxy India's growth story stocks are there. So when they accumulate these kind of stocks in their investors' portfolio, definitely they can participate in this rally and the growth story of India.
Okay, understood that. Well, let me talk about the one pocket that's really shining bright in today's trading action, and that's the FMCG stocks. You do have HUL that's up 3.5%, Nestle following suit. In fact, Britannia has hit a fresh 52-week high as well amid this broad-based buying that you're seeing. How are you looking at this space from the FMCG basket, and anything that you would want to recommend to all the investors holding on to these stocks and those investors who may be looking at a fresh opportunity here?
Sakshi, whenever the indices rallies, the stocks that will be coming back into the focus are like stocks like HUL and the FMCG stocks are concerned. So definitely investors with a long-term view, they need to make stocks like HUL, which are, as I told you, the proxies for India's growth story. Uh, 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 Definitely, they need to keep these stocks in their portfolio. At least some percentage of stock should be from this universe. HUL is a definite proxy for India's growth story. The consumerism is concerned. So at any dip, HUL can be the part of the portfolio of investors. Definitely, they may underperform if you see on a short-term basis, but if an investor have a longer-term view, 3 to 5 years view, definitely these are the stocks which will outperform in the coming days.
Okay, understood that. Well, apart from the FMCG stocks, some new age tech stocks are also on the top radar of the global brokerage houses. Let's focus on these two stocks, Paytm and Zomato today. Now, why are we on keeping an eye out on these stocks? Of course, these stocks have been in news flows over the last one odd month because a whole lot of stocks from this basket really faced that pre-IPO lock-in period getting ended, and the stocks have been hammered like anything in the last 1 year, and especially in the last few months odd as well. So a lot of wealth destruction has taken place. But seems like the global brokerage houses are actually now looking bullishly on these particular stocks. In fact, CLSA has come out with its report with a buy call on Paytm and has a target price of 650 rupees on this stock as well. What CLSA has said is that the price correction has made the risk reward favorable right here. They also believe that the loan and credit card distribution will actually be revenue growth drivers going forward from here. So those are the key factors because of which Paytm has been on the top radar of CLSA right there. Apart from this, on Zomato, we also have Morgan Stanley coming out with a report. They have maintained an overweight rating right there, and they have a target price of 92 right here. Now, what they are saying in their report is that there is a potential exit of the Amazon from the food delivery business in India, and that may have no material implication for Zomato as such. They also believe that the exit of Amazon from the food delivery business highlights the barriers to scale business for the new entrant in this space as well. Let's look at this space and understand from the investor's point of view, Mr. Batini. First up, Paytm. How do you really look at this stock? The trajectory has been definitely wealth destructing one, but going forward from here, the kind of points that have been highlighted by CLSA, are they worthwhile to be looking at from the investor's point of view who may be looking at Paytm at a fresh, as a fresh buying opportunity?
Actually, if you look at the stock like Paytm, okay, it is one of the highest wealth destroyer uh, uh, across the world. If you see the recent much hyped IPOs, but we are witnessing some kind of positive comments that are coming from the global brokerage houses like CLSA and even Citi also given a buy call. But there is a complete dichotomy with respect to the stock investing in these kind of business models. Paytm at a market capitalization of 30,000 crores. It looks like a high risk value buy for the investors. But the other side of the coin, if you see the reports and the comments comes from the Macquarie reports, okay, who have been negative on the stock from the day of the listing, they have a different opinion on the uh, 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 Paytm business model and also the revenues are concerned. So the point I would like to inform to the investors is there is a complete dichotomy with respect to investing in Paytm is concerned. One thing,
Okay.
they have a formidable brand reach in India. But coming back to the basics, the numbers, next couple of quarters, numbers are extremely crucial for Paytm. How they are going to improve the cash flows and also how they will become profitable. This is the bigger question among the investors. I advocate
Okay.
the investors only The high risk appetite investors can only adventure in these kind of business models only suitable for high risk appetite. Uh, and In the case of Zomato, the main thing that lingers around Zomato is the profitability. When they are going to make profits, when they become uh, net cash, uh, when they're going to increase the cash flows, is the crux for both of these companies. So investors with high risk appetite definitely they can take invest in these kind of companies in a staggered manner. There is no need to jump immediately and buy in these companies since the price looks very attractive, but one need to go with in a staggered manner, investing in these companies. I want to make a point again, only for the high risk appetite investor. If the investor is a risk averse, it's not the space to be.
Okay, so only high risk appetite investors should be really looking at the stocks of Paytm and Zomato. The brokerage houses have definitely given a sharp bullish take with a huge upside from the current levels. They've also given their reasons, but at the same time, the trajectory will definitely be important as far as the earnings recovery of both these companies is concerned, as highlighted by Mr. Batini. So do not take a bet as far as till the time you speak to your own financial advisor. Looking at these reports as well. That's essential, absolutely. Let's also take it across to my colleague now. Tanya Aneja is joining in with an important update on Shriram City Union Finance that has actually gone ex amalgamation. There is an amalgamation that's happening with Shriram Transport Finance right there. And what does it mean for all the investors who have held the stocks of Shriram City Union Finance so far, since the stock has now got delisted due to the procedural reasons? How should you be really understanding this? Tanya, please take it away.
Absolutely, Sakshi. So basically, Shriram City Union Finance shares will go ex amalgamation today. So the trading has also been suspended in these shares. So Shriram Capital and Shriram City Union Finance will soon be merging with Shriram Transport Finance, and the swap ratio has been fixed at 100 Shriram City shares for 155 Shriram Transport shares. The special bench has approved the three-way merger of Shriram Capital and Shriram City Union Finance with Shriram Transport Finance to create a combined entity called Shriram Finance. Now, Shriram Financial Ventures, which served as the holding company for Shriram Capital, will take on the roles of promoters and holding company for the group's financial services and insurance operations. Remember, Shriram Group had in December last year announced the merger of Shriram Capital with Shriram City Union Finance and Shriram Transport Finance. The move is aimed at creating the country's largest retail finance NBFC. And the company also said that the merger will help the Shriram Group bring together all its lending products, two-wheeler loans, gold loans, personal loans under a single umbrella. Back to you.
Okay, thanks Tanya for that update. Mr. Patini, how do you read into the kind of amalgamation news has come about, and what should investors be really doing now? Do they have a chance to benefit from this amalgamation, those investors of Shriram City Union Finance, and what do they really do with their shares going forward from here? What would be your advice?
Sakshi, the overall amalgamation process is with the aim to remove the complexity in the group structures. That's what the aim of the amalgamation is concerned. So the existing investors can hold on to the stock. I don't educate the investors to take any fresh positions because of this amalgamation news is concerned. So existing shareholders, because of the complexity and also to bring their group entity under single umbrella, this entire the process and the restructuring is going on. The amalgamation process is on. So how far it will yield the benefits to the structure, we need to wait and see for at least next couple of quarters. So for the existing investors, they can hold on, and it's not going to bring any drastic changes in the company earnings are concerned. Of course, it will give some kind of leeway and operational advantages to the company. For the fresh investors are concerned, they can just wait and watch the entire scenario. There are some kind of better opportunities in the NBFC space going ahead, and also there are very good opportunities with respect to the banking and financial services are concerned. Then this amalgamation process in Sriram Finance. So the existing investors can hold on, but any kind of I don't advocate any fresh entries because of this deal.
Okay, no fresh entries recommended right there. Let's also focus on a little bit macro update as far as the crude oil prices are concerned. We did see that crude oil prices had slipped to their 10-month lows recently on Monday as well. There has been a slight recovery, but most of the analysts do believe that lower oil prices could actually be good for the economy. They do believe that as far as our macros are concerned, it could help ease price pressures in the economy and also bring down the current account deficit that has of late been a concern as well. But on the other hand, we're also seeing that some of the analysts have actually pegged crude oil prices rising up to $110 a barrel in 2023. That's kind of a huge uptick from the current levels of around $82, $83 that you've been seeing the crude oil prices trading at. And this is from a Morgan Stanley recent report that we have got to know. How do you read into the kind of crude oil price trajectory has been remaining so far in the last few months? And in case we were looking at these kind of triple digit figures in 2023, how could that impact the economy overall, Mr. Batini?
So actually, we need to see the stance of RBI Monetary Policy Committee on crude oil, the impact on the inflation in the upcoming Monetary Policy Committee meeting, which is scheduled in the first week of December. That is crucial. We need to see how RBI is going to pursue the outlook on crude oil and the inflation, which is extremely important with respect to the markets and the coming interest rate hikes. This is a crucial area we need to see. But overall, one thing what we need to keep in mind in Sakshi, as long as crude hovers between 80 to $100, less than $100 per barrel, which is a favorable area, there are some companies which derive revenues from crude oil refining in India in the Nifty and Sensex also. So how it's going to play the game, which is very crucial. But last year, what we have witnessed is we have witnessed high crude oil prices, which were way above $100 also. And we are witnessing a downtrend in the crude oil prices because of the geopolitical reasons. Last 2 quarters back, crude oil went up to above $100 per barrel also. Now going ahead, one way, as you told, there is a forecast of crude oil above $100 per barrel in 23. But the other way, what we could able to see is the recessionary pressures on US markets. So when US economy in a recessionary prospects and crude oil at $100, there is a complete dichotomy in the statements itself. So what we need to see is how the whole scenario is going to take place in the coming next few quarters. We need to cross our fingers. But as long as crude is below $100 per barrel, okay, that is good for Indian economy is concerned. But one thing, Sakshi, what we need to take in mind always is depressed crude oil prices also may be good for the inflation, but depressed crude oil, it gives uh, a complete recessionary outlook for the economy and for the stock market. So
Sure.
we don't want the crude oil prices on a higher note, and also the market don't want the crude oil prices at a lower note also. So this is the
Absolutely.
dichotomy, and this is the way that works for in favor of equity markets are concerned.
Okay, but would you like to take any bet in the oil and gas space at all at this point in time? Looking at the crude oil prices movement from here on, does it make a sense? Does it make a case for investors to really look at, say, the oil marketing companies or the oil producers at this point in time to add to their portfolios some of these stocks?
With respect to the oil marketing companies are concerned, Sakshi, last few quarters they have been the underperformance. But there is an underlying value in stocks like for Indian Oil Corporation, which is at a very low price at a market cap of one less than 1 lakh crores, and with a dividend yield, the last year or last couple of years, if you see the dividend yield was about 10% dividend yield. Right now it is taxable, but about 10% dividend yield is fabulous for a risk averse investor also. Probably one can look at accumulating Indian Oil Corporation in their portfolios because of the price appreciation and also, excuse me,
Sure.
Excuse.
Absolutely.
So with respect to the dividend is concerned.
Okay, understood that. Thank you very much, Mr. Batini, for being with us through this show and sharing with us all your insights about the stock markets and the various pockets that you've talked about. Our focus is now turning macro. On our macro watch today are the India's growth projections. Now, we do know that there is no end to the downgrades in the GDP estimates, as economists worldwide remain quite divided on the severity of the economic slowdown that we could witness in the next year. And there's a wide divergence in the market consensus even regarding the Q2 GDP numbers that are slated to be announced on November 30th by the government as well. Now, so far what we know is that S&P Global Ratings has joined a slew of agencies which have slashed India's economic growth projections. The rating agency has revised their forecast downwards by 30 basis points to 7% for FY23 as a whole. The FY23 projections have also been seen a 50 basis point of a downtick to 6% right there. Now, ahead of the budget, we also center our focus on the India's taxation regime. Remember, with expectations nestled around the simplification of the capital gains tax, the big question remains, will the ministry really take note of some of the anomalies in the taxation guidelines? Now, Business Today Television's managing editor, Siddharth Zorabi, had a chance to speak with the Revenue Secretary, Tarun Bajaj, to really understand the Finance Ministry's approach towards this as well. Listen in.
What is the meaning of, for the benefit of our viewers, what would this approach imply where you, and just now you also spoke about the need to fix capital gain on various asset classes, because there is a divergent approach which has built up over the years. What would you recommend as the approach?
Today we have various asset classes, and even within the same group, say financial assets, somebody says that if you put in debt mutual funds or you put in debt directly, it is capital gains are different in the two cases, and there is a demand from the industry or from the capital market that we need to bring uniformity into this. So I think there have been various articles which say in some cases we get benefit of indexation, in others we don't get benefit of indexation. In some cases, as I told you, for 1 year, it's 1 year and below is short term, 1 year and above is long term. In some cases, 3 years and above is long term, below that is short term. So I think there's a need to think about it, simplify this so that there is no arbitrage created between financial products because there's a tax advantage. The product should sell based on its strength rather than on the tax arbitrage. So today, maybe we have created those tax arbitrage. I just read it in the papers that the industry is also saying that there's a difference in taxation between ULIPs and mutual funds. So all these things, corrections, if they are made, I think that will make it much more stable and much more progressive than what we have today.
Corrections in one go or spread out over time?
This is something which the budget makers will decide this time. I'm not part of the budget making exercise. But if you ask me my own opinion, I would say that if you are doing a correction, you should do whole stock rather than doing it bit by bit, so that there is clarity, because people who are coming into the capital markets are also big people, FIIs, FPIs, the mutual funds. So they should know in the long term that this is what the regime is going to be, and this is going to be stable for the next 10, 15, 20 years.
Okay, so that was the exclusive that Managing Editor Siddharth Zorabi had with the Revenue Secretary right ahead of the budget. There are huge expectations that they could be tinkering around the capital gains tax regime, and the expectation is that there could be some more simplification right there and more clarity for all the participants of the stock markets as well and the capital markets too. And with that, we come to an end of this edition. Thank you very much for tuning in for now. The stock market still up in trade. Both the Sensex and the Nifty are at trading near the high points of the day as well. We'll keep an eye out on how the markets progress from here on, and for that you should stay tuned with us on Business Today TV's YouTube platform. Don't forget to subscribe to this channel and also stay in touch with us via all our social media handles: Facebook, Twitter, LinkedIn and Instagram. Many thanks for tuning in for now.